The DHFL scam, also known as Dewan Housing Finance Corporation Limited, was a case of financial fraud that took place in India. DHFL was a non-banking financial company that provided housing finance to customers. The scam involved allegations of diversion of funds and financial irregularities by DHFL's promoters and executive. In 2019, a report by investigative news portal Cobrapost alleged that DHFL had siphoned off more than 31,000 crore rupees through a web of shell companies and dubious transactions. The report claimed that DHFL had created shell companies and used them to lend money to other shell companies, which in turn lent it back to DHFL. This resulted in a circular flow of funds that was used to siphon off money from the company. The allegations led to a series of investigations by various regulatory authorities, including the Reserve Bank of India (RBI) and the Securities and Exchange Board of India (SEBI). DHFL's promoters and executive were also questioned by the authorities, and the company was eventually taken over by a consortium of banks in 2019. The consequences of the DHFL scam were significant and had a ripple effect on the Indian financial sector. Some of the key consequences are: regulatory action. The DHFL scam led to various regulatory actions by the Reserve Bank of India (RBI), Securities and Exchange Board of India (SEBI), and other regulatory bodies. The regulators conducted investigations and audits of DHFL's books, and imposed penalties and fines on the company and its executive for violations of regulatory norms. Bankruptcy proceedings. Following the allegations of financial fraud and diversion of funds, DHFL was taken over by a consortium of banks in 2019. The company was subsequently referred to the National Company Law Tribunal (NCLT) for bankruptcy proceedings, which are still ongoing. Investor losses. The DHFL scam resulted in significant losses for investors, including retail investors, mutual funds, and pension funds. They had invested in the company's debt and equity securities. The scam also had a negative impact on the overall investor sentiment toward the Indian financial sector. Reforms and policy changes. The DHFL scam led to several reforms and policy changes in the Indian financial sector. These were aimed at enhancing transparency, accountability, and regulatory oversight. These reforms included stricter monitoring of non-banking financial companies, enhanced disclosure requirements, increased powers for regulatory authorities to detect and prevent financial fraud and irregularities. Reputation damage. The DHFL scam had a significant impact on the reputation of DHFL and its promoters, as well as on the Indian financial sector as a whole. The DHFL scam highlighted the need for better regulation and oversight of the NBFC sector in India, as well as the importance of transparency and accountability in corporate governance. Several regulatory reforms have been implemented in the aftermath of the DHFL scam. This included stricter monitoring of NBFCs, increased disclosure requirements, and enhanced powers for regulatory authorities to detect and prevent financial fraud and irregularities. Subscribe to our channel for more scam stories.